Thank you for coming on into live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So Bitcoin getting a little bit of that push to the upside and then drop to the downside, and now we're getting a reclaim of the zone before the weekly candle close in 1 hour's time on November 6th, Monday 2023. So let's go into the liquidity of this chart, shall we, of high block capital. What is high block? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters lie in wait and or get burnt to a crisp. So let's do it now. Going into the 1 minute time frame, shout out to everyone here on the live. Let's go take a look in the liquidity. So it looks like we had some neophyte breakout short traders to the tune of $218 million in 100x and 50x that limit ordered in or market ordered as we broke down here, and as they cleared that 50x range, they came down and gobbled up these 50x shorters without hesitation.
Fatality.
And yeah, they could be coming back for that 50x target up above at 35,467. With the way they V-shaped out of here, they intend to close with a bang by the looks of it. The longs are entering here as well, but not in that same strength as the shorts that just got gobbled up. So let's go ahead and take a look. They came back for this 50x long pool too that came out here, that was in profit at one time, that I suggested taking profits on yesterday as we predicted that move to the upside. Let's go take a look at what we said yesterday, exactly what was going on in our predictions and whatnot. So we were talking about coming back into this pool. It hit this fair value gap and rejected off the fair value gap and came back down. We were talking about somewhere in this golden pocket getting a rejection of some kind. We got that hard rejection. We even came back up for the 618 one last time and then dropped like a rock. Now we're V-shaping into those shorts as we talked about. So that pretty much came to fruition. Are we coming up to that 36,100 pool up above? Let's go ahead and take a look. 36,191, actually 3163. 36,163 has this 25x $274 million character. This would clear the entire range of shorts on the 1 minute. Let's go to the higher time frame pools and see what percolates above and below. Shout out to all watching. Now we have to go set this filter to the max liquidity. I don't know why they defaulted to the other when it was previously this all the time. So on the 7-day, you have some more still percolating below 34K. There is an imbalance down below 34K. Are they going to let it go in that direction to sweep the lows at some point? The imbalance is that direction. Also on the monthly, you're starting to get a thicker band percolating at that 33K region. Also starting to chime in some liquidity up in that 38K region, which was previously threadbare as we were approaching these highs and clearing all that liquidity out. Hence why we went sideways. As we were approaching this sideways range, I was saying, you know, we may go sideways for some times to induce more liquidity, and sure enough, 12 days later, we are essentially ascending channel sideways as I was saying. So we're giving the shorts the scare factor here as we ascending channel our way up. So if we go, wow, lovely, now getting a push, a mighty push up into that fib range again, taking out the 50xer. Did we get that 35,467 region? Not quite yet, but it looks like we're going to. Let's go ahead and take a look at the 3-month. 3-month, still sparse on both sides. If we just zoom in and forget about what lurks below, the imbalance is to the downside, but if we look what is above, we are starting to percolate some pools up at the 37.8 region. Overall, thicker down sub 34K. So at some point, scaring out the shorts and heading in that direction would make more sense. You do have that 36.359 billion on the 6-month. And if you go to the 2-year, that entire range gets cleared at 36.4, $135 billion up there. Do we make that stab to clear the range? We talked about how they leave some stuff on the table, and it doesn't necessarily mean that they clear it every single time. Even here, they left 155 billion on the table to come back to later. Even here, they left all of this up on the table before they came down. And down here, currently, they left 200 billion on the table, sub 24K. Are those the protected positions? Are we in a distribution phase to head back down? That is the question. As it stands right now on the 2-year, just to be clear, there is nothing above this 36.4 region really. I mean, above 38, you're pushing it. There's definitely nothing up in the 38, 39K. So any YouTuber telling you 44K are living in a pipe dream fantasy that could not justify a move that at that time. Until there is some sort of liquidity to grab, there would be no liquidity to add to the table just yet. All right, so let's go ahead and take a look at the momentum here. See if we can put things in perspective with some fibs and whatnot. Okay, link is in the description for more. momentummaster.info, and you can scroll down to features, toggle at Bitcoin's bottom to see everything as it stood at the bottom as a schematic. The stochastic array, the trend clouds, and the baselines, 3 of the major components we look at each and every day. So let's go see what that curvature on the cloud was looking like. We were talking about the 6-hour, and it looks like it's still pointing to 2 o'clock, so this curvature is not abating in any way, shape, or form just yet. It's still mighty thick, and we got that kiss off of that 6-hour cloud, and the super trend still holding on the 6-hour, so we're still good on our trinity for the Momentum Master trinity here. And if we look at, let's make our descent through the time frames on the daily starting to reset here. You could get a flash of the Williams at some point. Baselines cross down here with that potential push up. You could be getting that suppression. One thing in a bullish manner is this reset of the stochastic while you are going higher. That is a bullish sign, but simply put, how does this happen? Well, you look back 14 candles to get your calculation for the stochastic RSI. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So it forgets all of this stuff and basically starts to calculate going forward in time, and then it only has 1 or 2 up candles, and these become more weighted, and this starts to reset. So once you understand how it calculates, it's not necessarily, it just means we've traded into a new range and we're holding it. So I mean, it is what it is when you understand what the formulas represent and don't just use them. And I used to think it was like shorts resetting this, but it's not once you understand the code. On the 3-day, the 3-day is overbought, and we're talking about coming to get this draw up to the weighted moving average, not the weighted, the adaptive here. The adaptive can be read about here. It is a sensitive yet stable moving average. Are we getting that draw up there at some point before reversal? that could be the case. If we go to the oscillators on the 3-day, we have that overbought status, the RSI and the money flow at even Steven levels. Could go either way. The average of the Williams starting to drift up to that Williams itself. When we fail that Williams level, let me remove this channel real quick. When we fail this baseline, we will start to slowly make our way to the possible cross down event. I remember when we posted this cross down in July, and sure enough it played out, and then the cross up in September, and it played out as well. So we'll keep an eye on that cross down event on the 3-day. Still many days away. And the daily time frame, we could be getting these push up in that ascending channel manner to close out the week strong on that high level. The 22-hour time frame, we were talking about possibly getting that push up here and that possible suppression. The suppression played out into that those shorts that opened up there in a fervor with that $200 million short that they're now coming back into. And if we look at the 12-hour attempting to have that subtle support with the money flow beneath the baselines here, beneath the RSI rather. And if you look at the 6-hour, slowly but surely making its way to the overbought status and this bounce off of the cloud idea. So we previously had that 618 bounce, and we've been holding that range. We came down to sweep as many longs as we could and or induce the shorts, which they did, and now they're starting to peel out into that short liquidity. All right, so this fib is completed. Somebody in the Discord was asking about fibs, so I'm going to go over how to do the fib extensions. We do them a lot here. So the fib extension tools, let's just go into how you would use that. So from here, for example, we had an impulse to the upside. So before we do that, you have this impulse and then a retrace. Impulse, retrace. Within this impulse retrace is a mathematical echo of where it wants to go thereafter if the strength were to hold. So you can do this impulse retrace idea and it will hold these levels, and that's exactly where we went. You see that? Look at this. Boom. To the dollar, we went to that 35,305 level, and this is with 3 clicks away. Just impulse and retrace within that microstructure shift contains where your levels to maintain or to be bullish are. The 236 for that 35,496 level needs to maintain. We maintained it, and now we're heading back into those regions. So those things will give you, and then to a frugal level between the 1 and the 1382 for those take profit regions. And that works on all time frames. So if we go back a little bit here, and then we do this with even this level here. For example, if we take this impulse up here and come down to here, that is going to contain everything up to that 2 level that we came up to. So this, you don't need to add extensions to retracements. That's what the trend-based fib extensions are, hence the name extension. So don't listen to people who just do the extension, the fib retracements with higher levels above their retracements, because that math is only contains the impulse but not the retrace. so it doesn't really have that strength inbuilt into it in any event. So going to the hourly, so this impulse has been essentially negated through to that 0.65 level. So we're going to change this template to the deep retrace zones. So we still have a deep retrace area to look at for possible negation. If we look at the level here on the hourly looking to just take off in the shorts face, possibly coming up to that 35,828 level, and that partner in crime of the 36,163 region that we marked off yesterday. So we could come all the way up to this point here and fatigue and basically put in a higher high. If you caught that impulse, if we did a retrace up, a fresh retrace up to this region here, that was a 706 bounce by the looks of it, coming into that 706 of this entire impulse. And that looks like where we're bouncing right now. And we took out this fair value gap, so we can delete this, and coming back into this pool up here. So this is false move Monday, but it looks like the false move was to the downside, and we're starting to rip into those shorts face right now. And let's go take a look at Dixie and see how that is kicking off the week. So the adaptive moving average down here, we swept the entire low region. Dixie we tapped into that fair value gap, and then we ripped it to the downside here. Broke the super trend on the daily, so now we are heading into a possible retrace zone. Coming back into some of these gaps down below. Oh, that's where we're at currently. Came back to the weighted moving average here on the 12-hour. If we look at the 6, so as they reinvest the dollar assets after the sideways consolidation back into the NQ and so on. Wow, it looks like we had a huge, this was from the other day. So the NQ also getting a little bit of a bounce after the risk on assets now have the green light to go ahead with the dollar dropping here. Same with the Dow Jones and ES as well. If we look at the NQ here, let's just go ahead and remove this projection that played out for the most part. Here we go. So there is some zone over in here that we could be looking to reclaim. And or sweep this entire range here. Next supply, order block, whatever you want to call it. And BTC looking to make that a reality as well up in this region. Alright, so let's wrap it up in a nutshell here. So one thing to note is what are the things we have on our side? Well, we have, for upside potential, we have the cloud and the super trend on our side, and the baselines now crossing up. So the managing to close this candle in the next 35 minutes above these things is ultimately bullish to possibly put in a higher high on the 4-hour time frame. The 4-hour starting to curve here on the 50 level. You could get a double top scenario ensue. So we could be making that way up to that higher high and fatiguing at that point. We've already hit the 618 multiple times, so this 618 retracement of this possible rejection, which we did get one time, and twice actually, because we rejected here and went down, is now possibly going deeper. So we switched to the deep retrace zones, and we have the 35467 pool to look at, and then up above here. So looking for this to continue on the 4-hour time frame and possibly see how this hourly plays out as well. You are getting this blue vector that needs to turn green, or it could be considered a stopping volume candle. By the looks of it on the 1-minute time frame, we're just refueling off of some of these breakout longs right here. So we're coming back into this 83 million long that opened up here at 35,348, liquidation point at 35,153. So it looks like they're tapping that guy right now.
Fatality.
And once they tap into that 83 million, they could go along their merry way. So that's what's happening to those breakout traders right now. The people playing the breakout are getting screwed, and then it will continue possibly in that direction up to the upside. This is why you need to use math to kind of get in on a predicted confluence level and use the momentum in your favor. So 15-minute as it stands right now starting to play out here. So the 15-minute needs to reclaim the cloud and shift this cloud in a manner here like this. And then if it comes back and bounces off of the cloud on the 15, you're still in high spirits for upside. Similar to here, back before our live yesterday. So yesterday we came above the cloud, reclaimed the cloud, and we were gone. And that thinning point is where we talk about a lot, that thinning area of the cloud. So if you're late to the party, it could possibly present a moment of re-entry, perhaps, if it comes back to a region and then this cloud is thin at that point. Perhaps the 15-minute resets and gives you an entry idea. And that is my story, and I'm sticking to it, folks. Let's see if you have anything. Last night, I forgot to look at something. Somebody wanted to look at a coin as I was leaving. Does anybody have anything they want to look at? One last chance to pull up something. It would be more like that time. Anybody have anything to bring to the table? last chance. So we're holding this cloud on the hourly and the 4 hour, so just looking for this to continue perhaps. The curvature here on the hourly showing some signs of weakness if we cannot maintain candles above it. But as I said, we're just coming back into that long breakout trader liquidity, some more down at 35,021, 44 million that they could come back into. But ultimately on the 1 minute time frame, there's still some more up above. So they tapped into some of this 114 million at 35,400. They got that guy, and then they came back for the breakout long. Yeah, so that's my story, and I'm sticking to it, folks. So thank you for coming on into live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we'll catch you